Good afternoon, traders and investors. This is Corey Rosenblum, and I want to take a moment to really just study the charts of what happened with the volatility in the stock market the last couple of weeks and ask this question. Is this a third retracement and the bull market will continue, will make on to new highs, or is this a major market reversal? I want to compare a couple of other examples with you. We'll take a look at those for the stock market. What we're seeing here is the Dow Jones weekly chart. This stretches back to 2009 when the bull market began and ends just recently here in August, moving into September of 2015. This is a rising uptrend. We see higher highs, higher lows, and really very little in the way of what we call retracements or pullbacks against the bull trend. Here's what a retracement looks like. We'll take a look at 2010, where the market had this initial pullback from about the Dow Jones from 12,000 to about 10,000 here. So about a 2,000 point pullback. In 2011, had about a 2,500 point pullback. And that's about the same level here in the Dow Jones. Not much happened. We had one really 2012, not as big, and little tiny retracements, small pullbacks from 2012 until present. Well, the market was really overdue for a pullback against this trend. And again, we want to know, is this just like the other pullbacks, or is this something different? Maybe is this like 2008 when the market would turn over and reverse? Let's just compare these two pullbacks to this, the high volatility from 18,000 to 15,500 in the Dow Jones. Case 1 was that May 2010 flash crash. If you remember that, if you were trading and investing during that point, that was a day where the market really crashed in a single session. That was the flash crash, but the market continued retracing in the next weeks. So here's what it looked like going into the flash crash. This is 2009 up to 2010, and the market peaked above 11,000. This is that flash crash, that big one-day crash of the market. Little recovery, and the market made new lows after that. On this 10,000 level, what happened next? No, the market actually went ahead and made another new low. So we made 1, 2, 3, 4 new lows, consolidated, and that means chops and goes sideways. And then what happened next? The market made new highs. So we'll see this pattern start to emerge. But the pullback from 2010 was a strong down move, the V spike or violent reversal up, choppy market action from 2000, really from April, May, June, July, August, September into October. Not that much different than we are in 2015. And again, we're just making comparisons. As a chartist, as a technical trader, looking at the market from a chart perspective, we're looking at patterns from the past and trying to see if the market of today, how might that play out in the future. So if the market plays out as it did then the market made new highs going into the final year 2010. The second case was August of 2011. A lot of headlines going on, but just quickly, Greece and the debt ceiling. Will the government shut down? Will the government pay its bills? Will Greece to fall? Will Greece leave the euro? That's what was the underlying currents and underlying news articles, at least during this point in time. And we see this. So this we can actually go back and look at the flash crash and this 2010 retracement and the bull market recovery from that point on. So the chart in the prior slide ended about here, and the market continued up to make new highs. And this prior time, 2011, the market peaked about 12.5 in the Dow, initial pullback, and there was your crash pullback. So that was the big move from about 20 or 1275 to just above 10,500. Big pullback, multiple days in a row to the downside. What happened next? Similarly, this consolidation or choppy environment. Market went ahead and made a new low into 2011, just under 10.5 in the Dow Jones. But of course, what happened next? Same thing. The market had a big, strong uptrend, big burst to the upside, 12,000, pulled back. That's a steep pullback, actually, and then went off to make new highs. So that's the comparison. So the same thing, we're going to form a pattern here, and that's the pattern. What exactly is that? This is just a chart of the line graph of the Dow Jones. And so there's your big pullback, big retracement, consolidation, up move. 2011, same thing. Retracement down, big sell swing, consolidation chop, up, and then on to make new highs. Quantify this pattern and make it more official by saying there's a decline, a steep retracement phase, a phase 2 consolidation or chop environment, and phase 3 rally, off to make a new high over the prior high. 2011, same thing, initial decline, consolidation, and rally, off to make new highs. So what is the expectation in 2015 as we try to plot the remainder of the year? What's the expectation if history repeats? And here's our chart at the moment. So phase 1, decline. Phase 2, that's probably where we are right now. A consolidation or choppy phase probably will take place ahead of what we hope at least and expect to be a rally going through 2015. If we take this, I like doing this for the membership, for the analysis as well, which is plotting out the future. So given where we are now, given historical probabilities, given the roadmap of the past, what's the pathway to the future? Probably, though nothing is guaranteed, probably the market does a consolidation and chop throughout September, possibly makes a new swing low. If we saw the other two examples, there was initial chop, initial retracement, initial chop, initial sideways action, and then a slight new index low was made after an initial phase. Then the market chopped around some more, and then eventually broke to new highs. Phase 3 is that recovery phase, where the market could push back to new highs. And if that occurs, if the pattern repeats a third time, that would take us through November, December, and possibly making a new high then or into January. But right now the main focus is we are in a pattern that's happened 2 times before. This is the third example of this steep counter trend to the bull market, retracement, and this consolidation phase. And if history repeats, the next phase could be a third swing to new highs. So right now, just summarizing, we're in the consolidation phase. What do we do? Watch how it plays out. This may be a good time to buy individual stocks or ETFs you've been looking at that's been on a watch list or a buy list. Stocks that are good fundamentally, or strong fundamentally, with cash flow and earnings, and maybe forming, if you look at charts, patterns that signify buy signals. Retracements to support, breakouts from resistance, any pattern that is a technical or a chart buy, and otherwise be on the lookout in the future if the consolidation phase does take place and the market breaks 3 of the consolidation phase. Be on the lookout, be excited about really the rally phase, potentially into the end of the year. On the alternate, as traders and as investors, we can't say this will happen, this is absolutely what will happen, and without any doubt, we always have probability. So the alternate is this time is different, and if it's different, we'll take a look at that in another video, which would be a reversal. That would be similar to 2008 when the market peaked and turned down, really 2007 going into 2008. So is it the same where we have a third pullback consolidation rally to new highs, or is this time different? We'll take a look at that. Stay tuned.